I think we should be live again. Just checking all the final stuff. Long time no see for probably most of the people that are going to join because I was just live streaming, but okay, let me check if everything is working. Perfect. Everything is working, and I also see the first people joining in once again. So now the true fun can probably start. Hi Justin, nice to have you back. Nice to have you back. Here we go again, indeed. But this time it's probably going to be a little bit more interesting than what we saw in the last stream. Let's just say it like that. Hello from Michigan. Hello, hello. Nice to have you here. And we have the Powell speech coming in about 30 to 40 minutes from here. So 30 to 40 minutes. And then we are going to have the Powell speech. And I was just doing a little bit of research, of course. And what I saw was the following. That the Federal Reserve Powell is going to speak on the economic outlook. So that's definitely going to be quite the interesting meeting. We should keep our eyes on, of course, these rate cut probabilities. Now for October, the rate cut probabilities are well above 90%, and for December, well above 75%. So very interesting. We should keep our eyes on these predictions. If they are going to fall lower, we're probably going to see a dump. If they're going to move higher, we could see a pump. If neither is going to happen, we are just going to see more consolidation like we have been seeing for the past few days here for both Bitcoin and Ethereum. Hello from India. Hello, hello. What is Powell talking about today? He's talking about the economic outlook. So probably we'll make some comments about the rate cut. Of course, the first rate cut in quite a long time. In the last FOMC meeting, he will talk about that. The economic outlook in general and a lot of other stuff probably. Hello from Holland. Hello, hello. And hello from India again. So yeah, before we dive in, of course, we have about 30 to 40 minutes to fill here. So I will just discuss some Bitcoin charts. In the meantime, I will discuss some Ethereum charts. I will show you the important levels, which I do want to see breaking, or I definitely don't want to see breaking after this Powell speech. So yeah, let's dive directly into exactly that then. Because Bitcoin, of course, still this inverted HNS pattern. If we could see a pump after this Powell speech, it could confirm a positive daily close, a green daily candle close. And that's definitely going to be very bullish. If you're going to have a green candle close here, then we could confirm this HNS pattern, and then this neckline is going to be your next target. If I buy ETH at 4.1 or 4.2k almost, is there any problem? It depends. Are you just going to buy on spot? Are you going to take a position? What is your exact ID? But yeah, like stated, Bitcoin, if you could confirm this, the next target is going to be the neckline of this inverted HNS. And the target is then going to be about 117k. And that also aligns with this super important resistance level, which is also laying at about that 117k level. So if you could confirm this inverted HNS, I'm expecting a move towards the resistance. If you could be breaking this resistance, you're probably going to retest it first, and then you're going to move to this next resistance, which is basically the all-time high. So in my opinion, I can just draw it out how I see this bullish scenario happening for Bitcoin. I would like to say that something like this is going to happen. Let me get the correct arrow chart. I would like to say that something like this. Boom, 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 boom. I would like to think that something like this could happen for Bitcoin in my bullish case. The levels I don't want to see Bitcoin breaking also after this Powell speech, or the levels, basically the support zone. I don't want Bitcoin to lose the support zone. Then I'm maybe going to turn a little bit more bearish, because I don't see a lot of other important support levels in that case. And also, I do think in that case, we're going to drop a little bit lower to grab the liquidity at that 107k level, because there a lot of liquidity is stacking up. Like stated, if you're going to confirm bullish breakout, then most of the liquidity is going to be stacking up here at 118k and 120k. A speech from Trump. Was a speech from Trump ever bullish? But there will be no Trump speech now. So I don't know what you mean, to be fair. There won't be a Trump speech. It will be a Powell speech, the head of the Federal Reserve, a Powell speech, which is definitely going to be hugely important, most definitely because it seems like he's going to give comments on the economic outlook. I do have a live stream here, so we will be watching that later in this live stream also. So yeah, just a little bit of this one starts at 6:45, but on the economic calendar I do see a different timing. So yeah, I would just keep an eye on that, on exactly when this is going to start. Can you please tell me the price moment of Dotcoin? I'm confused. Maybe a little bit later. Maybe a little bit later. This live stream is more dedicated to of course the Powell speech and everything surrounding that. So if you do have more questions about that, then I can dive into it. I don't want to. Trump was just talking, wasn't paying attention about what. Yeah, he was talking indeed, but not about markets. Yeah, he did say something about the stock market at the UN conference, but he did not mention anything about crypto. I think Trump will speak as well about some crypto news. I don't think so, to be honest. Maybe there's just some new stuff coming out. I don't know. Let me check it, my notifications. But I don't think Trump will be speaking. I believe the speech was very well received. Morgan Stanley, just in Binance founder. No, I don't actually see a announcement of Trump or something coming out. Can you increase the volume a little bit? Not by a lot. I think maybe you can increase the volume yourself a bit, because if I'm looking into my stream settings, my volume is actually quite hard. So maybe it's up to your volume also a little bit. I can't really increase this much and much more, to be fair. No, I can't really do that. This is probably the loudest it's going to get. I will try to speak clear and loudly then. But no, I don't see anything about a potential Trump speech about Bitcoin or crypto today. What we did saw was, of course, a massive announcement that was allegedly coming, but I was just live streaming about this an hour ago, and most definitely it was not a massive announcement. So yeah, not expecting anything more on that. Yeah, the announcement actually was that the new governor of California, not the new governor, but one of the new candidates, is going to support Bitcoin and buy Bitcoin for the strategic reserve of California. But yeah, that was not the news I was hoping for, to be fair. Volume is good. Okay, perfect. Nothing burger. I don't necessarily think that the Powell speech will be a nothing burger. I think that the previous stream was a nothing burger. Most definitely. Okay, then also let's look how my trade is performing here. Trump said the stock market has gone higher than it ever was, and some about gold, I think. Yes, he did say something about stock market indeed. October in 8 days, yes, most definitely. Insane how bullish the crypto market has been in October, historically wise, for both Bitcoin, but also Ethereum. October is just the start of something bigger most of the times. In how many hours does the speech start? The speech starts in about 35 minutes from now on. 35 minutes. Yes, and it's not only the only news we're going to get in. Basically, this day kicks off a lot of economic data this week, and I will be live streaming all of this, so just make sure to keep tuning in on all of the live streams. But today we have the Powell speech, the services and manufacturing PMI, on Thursday the US GDP data and initial jobless claims, and on Friday we have the core PCE price inflation data. So a lot of stuff. Okay, small update on my trading position then. Of course, still my Ethereum trading position open here, position of over 11k now, in a slight little loss here, but I have been adding to this trade in this support zone, and I will be adding more on the way down or on the way up if I'm going to see a new pattern form or a new bullish confirmation. What I'm currently thinking of the Ethereum price action is the following. I talked about this in my update video this morning, but also in another live stream. Make sure to check out the update videos if you do want to stay up to date about my thoughts surrounding Ethereum and Bitcoin. But for Ethereum, I'm still thinking the same. Ethereum broke below the moving average 50 trend line, which is this blue line for the first time since June. I think it was June where we saw like this dip. So since June there we also broke below the 50 moving average line. We did grab a lot of liquidity there, and the total dump here was about 15%. That's why I don't think we will dump much lower than 15%. I do think maybe this dip is already over, because if you do look at the funding rates for Ethereum, actually it seems like the bottom is getting quite close here. But worst case scenario, 15% drawdown from here. I'm going to be accumulating in this zone. This liquidity grab is going to be my buy zone before I think we are going to be heading higher. And that is why I have been opening this Ethereum trade. I have been adding to my trade, and I will be adding more over the next few days, weeks. Depends on how long this is going to last. But I do think we could still see some weaker seasonality playing out. Basically in the final 8 or 7 days, I think it is, of this month. So yeah. That's what I'm currently thinking. If you do want to join me, make sure to sign up on LBANK, because there you can claim this 50% deposit bonus. So make sure to check that out. If you're going to use the link here on the live stream, you will get forwarded to exactly this page, and there you can claim your 50% deposit bonus and start trading with me on Ethereum, or you can just trade another pair on LBANK you like for example Aster, Solana, XRP. All of the altcoins are getting quickly listed on LBANK. So yeah, make sure to check that out if you're not a trader yet here. Okay, so that was a small update on my Ethereum trading position. Like stated, expecting this liquidity grab. And of course, it's going to be super interesting for me what the price action is going to do from here. Maybe I should be opening another position in, let's say, just 30-35 minutes from here. Because if the price is going to dump, I will be accumulating. 6? What do you mean with 6? What do you mean with 6 exactly? So yeah, maybe we can be trading a little bit also later. Ethereum still in this range, which is in my opinion looking bullish. Of course, first of all we were trading in this symmetrical triangle, somewhat like that. Unfortunately, we did break down of that triangle, so that's not what I was hoping. But I do still think that a range like this, just under the previous cycle high, which we can spot here. Let me just quickly draw it on the chart then. Horizontal line. Look at that. A range just under the previous cycle high, and of course after this all-time high is in my opinion going to be bullish, definitely because of all the circumstances Ethereum is trading in. I do think Ethereum is still looking very, very good. So once we're going to see some positive momentum again, I do think we could be breaking this range, breaking above the previous cycle high, breaking above the all-time highs, and then that final Ethereum wave is going to get initiated, and that's where I also will be taking some profits on my trading position, of course. What is Powell telling today? He will be talking about the economic outlook, so I don't exactly know what he will be telling today. I don't know him personally, of course. But yeah, he's going to give his thoughts about the economic outlook. So probably he will tell us something about the rate cuts we have seen. First rate cuts in quite a long time. Maybe he will be hinting a bit on what's going to happen from here on with the Fed monetary policy. Will we see more rate cuts? Won't we see more rate cuts? Stuff like that's going to be very important. We should be listening to his tone also. Is he going to be dovish or is he going to be hawkish? Stuff like that. So yeah, in about 30 minutes actually. Is he going to be hawkish or is he going to be dovish? That is of course the big question here. Yeah, back to Bitcoin. How actually is the price doing on the short term here? Yeah, just the consolidation we've seen for like this full day. What I also do want to discuss, to be fair, is this resistance level I spotted on the Bitcoin dominance chart this morning, which I don't see a lot of people talking about, to be fair. But I also did mention it in some of my earlier update videos on the channel. And that is that normally in September, the Bitcoin dominance does tend to see somewhat of an uptick. And some liquidity will flow back into Bitcoin, away from Ethereum and altcoins actually. And what I'm now seeing is that the Bitcoin dominance is actually exactly bouncing off this level, but we also saw it bounce in 2020 basically. I don't think we will see such a large move back to the top side, but maybe we could see a little bit more liquidity flowing back into Bitcoin before eventually heading lower. I do think this is going to be an impossible scenario, but probably this is going to be the phase where a lot of people will start panicking, and where altcoins will start maybe dumping a little bit more, and then we can be accumulating, I think. So quite interesting how the Bitcoin dominance chart is lining up. Maybe it will just quickly break lower, I don't know exactly, but that's why I'm also DCAing into my Ethereum trade, guys. I did discuss this in, I think it was this video on the channel. I will quickly show it. How you can leverage trade on LBANK yourself. I did discuss in this video what my strategy is, how I DCA into my trades, and that's what I'm also doing with Ethereum, with some limit orders open also here for Ethereum. If the Ethereum price is going to drop lower, I do have some levels where I do want to be accumulating. Powell is hawkish like always. In my opinion, last speech he was dovish, and also, I don't know if you can remember the Jackson Hole speech, where very unexpectedly he was very dovish. That was, of course, quite something unexpected for the market, because the pump we saw after that was quite insane. So yeah, let me check on the news, because now it's about, what is it? Let's say 30 minutes left before the speech. Let's see if we can have some stuff coming in. I will also just do a quick post on Twitter that Powell is going to speak in about 30 minutes from here. Just give me a quick moment for that. Boom. Powell speech. Oh, reminder. Powell speech in 30 minutes. Boom. The market cap and volume are lightly dropping. Seems like Powell's aura is frightening them. Yeah, maybe. Quite a funny way to describe that. Okay, doing this quick post, and then I will be back sometimes. Of course, maybe for the new people, sometimes I'm also doing a quick post on Twitter, because I do want to update my Twitter audience. Like, I'm also updating you guys on YouTube, but I will be doing both, because not everybody wants to join the live stream or does have time at this certain moment. So yeah, Powell speech in 30 minutes. Expect. What do you guys think? Is he going to be hawkish or is he going to be dovish? Volatility. Is he going to be hawkish or is he going to be dovish? Let me know in the comments. Oh, not now. Let me know in the comments. Let's see how the price is performing now. Actually, all altcoins are still outperforming versus ETH here, which is quite interesting. Now about a 17% move up from this oversold level on the others versus ETH chart. So the smallest altcoins divided by Ethereum have now bounced about 17% this cycle. And last time we saw the RSI getting this oversold was in 2021, and there we saw a bounce of about 144%. So looks very promising. Dovish, I hope we need a pump. We definitely need somewhat of positive momentum. I really hope so. When's the Powell speech going to start? The Powell speech will start in about 30 minutes from now, probably. Let me also scroll on YouTube what the other people are saying and stating. Yeah, this one is planned for 6:45. So that means it will be in what is it? 35 minutes? Yeah. 35 minutes. I think it's at this time, to be fair, because this is the only stream I can find which seems to be discussing this. Yeah, also the stream from Mr. Crypto, of course. But this seems to be the only stream I can find. Just need to say all the good news. Yeah. But what I do find interesting is that this stream is stating that he will be speaking on the economic outlook, and that is definitely very bullish, in my opinion. Here, watch live as Federal Chair Powell speaks on the nation's economic outlook on Rhode Island. His speech comes less than a week after the federal rate cut decision and signaled the possibility of 2 more cuts this year. Kijk, look, this is what we should be looking for. Any mention about the possibility of 2 more rate cuts are going to have an effect on the market, because the market is pricing this in now. Definitely for October, but also for December, the market is pricing in more rate cuts. So yeah. Time to get drunk and eat chicken fingers. Okay. Have a lot of fun on Tuesday. Very nice. But yeah, for December, it's now a 77% chance that the Federal Reserve is going to cut the rates. So this probability could still shoot a little bit higher. Of course, we could also see a 50 BPS rate cut happening somewhere this year. Still a lot of possibilities. We could also see no rate cuts happening this year. Guys, there's still so many possibilities here. Okay. Market will go up or down. That is almost impossible to predict just before a Powell speech. If you're going to learn one thing from this stream, that is that it's impossible to predict where Bitcoin or crypto are going to move next during the Powell speech, because you will see some insane volatility like always. There's always some insane volatility. In 30 minutes, Jerome Powell will pump the markets. Okay, I hope so. I truly hope so. Let's take a look into my trades. I believe the Fed should stop QT and start QE. Also a very important one, which I did not mention yet. The shift from QT to QE is going to be, of course, massively important. If something like that is going to get announced, yeah, the markets will pump like crazy. But I don't think that this is going to get announced here. So, yeah. I don't think that he will announce something like that during a speech like this. I don't think so. But yeah, if something like that could get announced, it's going to be massively bullish. But during the last FOMC meeting, so 8 days ago, where we did saw the first rate cut, actually there was mentioned that nothing will change with QT. They are still slowing the pace of QT, so that is of course bullish, but we are not close to QE yet. They are just slowing the pace from QT, so they are slowly building off their balance sheet. We can also take a look into this in TradingView itself. Here we do have the... I will open a new TradingView for that. Let me do this one. balance sheet. Look, this is what everything is about basically, because what's going to happen once QT, for example, gets announced, you're going to see the balance sheet moving up again. And now, since we are in this slowing phase of QT, which you can also clearly see on the balance sheet, because here you saw a very fast QT, but now we are seeing somewhat of a curve in the QT. Eventually this is going to get very minimal, and that's the moment where you do want to get a QE announcement. But I personally think that's still a little bit early for the QE announcement of the Federal Reserve. I do see something like this happening maybe at the beginning of 2026, and then of course at that moment we have to at that moment we should have taken a look into how the markets are looking in general, how's the liquidity doing and stuff like that, and then maybe we can act based on the information we have at that certain moment. But for now, it doesn't seem like QE is coming. It still seems like QT will just only be slowing for the next few months here, just like it has been doing in this period of time. Because of course in 2024, which was exactly this moment, I think, September also, this was the moment where the slowing of the pace of QT was announced. So yeah. Let's see. Let me check if some news is dropping here. No. Nothing new yet. Nothing too interesting here also. Got it, thanks. No problem. Still at 16:45 indeed. So I don't know if it will be a live speech. Maybe it's a little bit of a delayed speech or something. I don't exactly know this. But I do think this is going to be an unstream we can watch, because they are also streaming the UN event now. So I think that's going to be fine. Trump goes off during... Yeah, I think we should just be watching this stream, and that happens in about... what is it, 30 minutes from now on? 28 minutes. So in 28 minutes we are going to have the Powell speech speaking on the economic outlook, and maybe even before that we will see some news coming in, and I will cover all of that of course here. I will cover all of this. Trade still in a slight little loss here of about $215. For the people new joining in, if you want to trade with me on LBANK here, or you want to trade some other altcoins on LBANK, like for example Esther, I have been talking about in one of my videos yesterday, or all of these other pairs, make sure to check out LBANK, because here you can claim that 50% deposit bonus I have been talking about for quite a long time. You can claim this bonus just with the link in the description under this live stream. I will show you here. Make sure to check this link out to claim the bonus, and then you will get redirected to exactly this page, and there you can claim your deposit bonus. So make sure to check that out if you're getting interested in that. And what I will do, I think the link is not showing correctly, so I will quickly make a change here in the stream. Just one sec. Boom. Like this, and not the correct link is showing, so I will adjust the link in the bio so everybody can claim that 50% deposit bonus. Boom. Okay, then go back, let's refresh. Boom. Now you can claim that 50% deposit bonus there, if you do want to do so, and join me on LBANK. And the Ethereum funding rates do truly amaze me at the current moment. I do find this quite amazing. I do think the Ethereum bottom is actually much closer than most people think now. Most people are starting to be a little bit overly bearish, I think. just once the funding rates are turning negative, and every single time we see this happening for Ethereum, we do tend to see those bottoms. So I don't think this time is going to be much different, to be fair. So yeah, Ethereum chart looking very good. Like stated, I will be accumulating in this zone, this liquidity grab zone, I like to call it. Expecting a maximum dip of about 15%, just like we saw last time once breaking below the 50 daily moving average trend line. And in this zone, I do want to be accumulating. Here I will be adding to my trade on LBANK here. Like stated, also some limit orders open at the 4K level, the 3.8K level, and the 3.6K level. So yeah, Bitcoin. Just to give you guys a reminder where I don't want to see Bitcoin moving and where I do want to see Bitcoin moving. In my opinion, this is the most important support zone for Bitcoin. I don't want to see Bitcoin breaking below this zone. That's going to be a little bit bearish in my opinion. What I do want to see for Bitcoin is the confirmation of this inverted HNS. And now Bitcoin is actually the daily candle is about to turn negative, but I do want to see this daily candle closing green. That is going to be very bullish, because then we confirm the inverted HNS. Then you have a breakout target of this 117K level that also exactly corresponds with this resistance. And we do know from this resistance, if we break below it or get rejected, we do see a move to the downside. If we break above this resistance, we do see those moves towards the new all-time highs. So hugely important level. If you could be breaking something like this on the broadening wedge chart, it would look like a breakout here to the top side, not a retest, and then the final Bitcoin wave higher. I do think that is quite a clear game plan, to be fair. Quite a clear game plan. Should we hold coins now or wait for more dip? I think if you're just holding coins on spot, it's going to be a great moment. And then you should just be holding through the dip if you're going to get a dip. I would never wait for the dip in a market like this. Also me, look, for my Ethereum trade, I could also have been waiting for the entire dip, but I have been slowly opening my position on my DCA, like I explained in other videos. On my DCA, I'm slowly opening my position, just in a slight little loss. But for example, my loss would have been far bigger if I just opened my entire position at my first entry at 4.3K. But I'm slowly building this position, looking at where the price is basically moving. And from there on, I will eventually have a full position of about 30K in size, I'm thinking. And then I can ride that up to new all-time highs and yeah, can make a nice profit on it. So I'm also not waiting for the dip. And definitely if you're holding on spot, you should not be waiting for the dip, I personally think. If you're of course having a very high leverage trading position open, it might be a little bit different for you, I don't know. Powell speech in about 20 minutes now. 20 minutes. Very, very excited. Oh, what's this? The stream started here. Yeah, I think this is just the beginning of the event. Okay, interesting. The speech or the live stream just started. So we will be watching this live stream in just a minute here. Let me quickly check. Powell's not speaking yet, so don't worry about that. But the event, because he's speaking at an event and it seems like the event just started. So yeah, we will be tuning into this stream at about 18:30, I think, something like that. Then we have a little bit time left before Powell is going to speak, because on the economic calendar, I'm seeing that he's going to speak at 6:35. So that means he's going to speak in about 10 minutes from now on. So I will also be doing a quick tweet on Twitter then that he's going to speak in just a few minutes. Now another guy speaking. It's probably a guy from the event or something. I don't know. Should we? I see. Yes. Where are you from? I'm from the Netherlands. I'm Dutch. Probably you can hear that because of the way I'm speaking English. Okay, so Paul's speech starts in 10 minutes. Just give me a little bit of a moment to also do a tweet about this, so my Twitter audience can also join in here. Boom. Yes, I think it will be in about 10 minutes. Be right back. The stream states now. And just in a few moments, guys, I will also turn on the sound and stuff. So yeah, don't. Everything will be fine. Just doing a quick tweet. Powell speech in 10 minutes. Join. Watch. Yeah. Estimate in 10 to 15 minutes, the Powell speech. So we are getting quite close now. Boom. Okay. Okay then. I just tweeted, so more and more people should be joining in. And in about 10 minutes, I think the stream is going to start here. Also, let me have a quick check if no other streams are live now. Powell. Okay, this is exactly the same. Do you think there will be a recession for the US next year? I personally think that the US might be in a recession now, but it also very much depends on how you're going to look into a recession. Is that going to be the fact that you have negative GDP for 2 quarters in a row, which is usually how we would describe a recession? But I do think because of the US job data we've seen in the last few months, and most people can't even remember it, but the reason that we are cutting rates is of course because the US labor market is looking very weak. I do maybe even think that the US is very close or in a recession. Could be. But maybe the data is not showing it yet. Next year could also be the case, but yeah, personally I'm not waiting for a recession because yeah, you will miss a lot of opportunities thinking that way. Not saying you are doing that, but yes, there's going to be a recession. Okay, I think this stream should be totally fine. And it's going to start in about 10 minutes, I think, guys, the Powell speech. 10 minutes. And then I will tune on the audio and we can dive in. Just for the new people dropping in now, what you do want to know is that we are looking into these Fed rate cut probabilities. For October, the market is pricing in a rate cut. And for December also. So 2 rate cuts this year. Basically. That's the most important stuff you do want to know about. If these predictions are going to come lower, the crypto market is probably going to dump a little bit. If they are going to move higher, the crypto market could see quite a nice move to the top side maybe. And yeah, that's going to be bullish, of course. If you do want to join that, if you do want to claim that 50% deposit bonus, by the way, guys, make sure to check out the link in the description on this live stream, like you can see on the banner. And yeah, I will just keep my eyes a little bit more on the stream now also. And I will just put a new step here. Let's take a deep dive into if there has been some new news coming out. Fed Powell speech on the economic outlook. Okay, we can also take a look into this one. Let's see which one will be best. Bloomberg television, because usually Financial Juice is a very trustworthy partner. Watch live. Oh, also mentioning the Bloomberg one. I think I will just watch this one then. But yeah, in about 6 minutes from now on, the Powell speech, then I will turn on the audio and we can see how the crypto market is going to move from here. Very, very interesting. It's going to be very interesting. Bitcoin is pumping a little bit now. Also, Ethereum is even pumping a little bit more than Bitcoin. But yeah, not a lot. We are just seeing some consolidation today. Some volatility also. 5-minute chart, of course. So yeah. Let me zoom out also a little bit. Like this. Trading position. Let me check it. About $200 in a loss. If you do want to join me on that position, make sure to check out the link in the description here, so you can claim that 50% deposit bonus on LBANK. Stream is going to start in 5 minutes. 5 minutes from now. What are your expectations, guys? Drop your expectations in the comments. Is he going to be dovish, hawkish? Is it going to be a nothing burger? Let me know in the comments what you guys think. A lot of stuff. 100 active people watching. Amazing. Nice to have you guys here. If you're new to the channel, welcome, welcome. I'm allergic to a hawkish Powell. Let me see if some new stuff is coming in here. Not yet. Okay. Speech in 4 minutes from now on. What is it going to be, guys? A FOMO burger with nothing sauce. Okay. Quite a nice way of putting it. FOMO burger. Okay, let's see. If it's going to be a FOMO burger, we should see a pump first of all. Now the market is not doing a lot yet. But yeah, I must say the rate cut probabilities are very high. So it will be hard to pump the markets much higher. But yeah, let's hope so. Let's hope so. The market could definitely use a nice impulse with, for example, Bitcoin in this inverted HNS and Ethereum looking to basically complete this liquidity grab here, which we have been discussing in my buying zone. I will be accumulating more. Maybe we can be trading just in a little bit here. But yeah, speech in 4 minutes. Is it a mistake to enter a Bitcoin long now? I don't know if it will be a mistake eventually, but I personally never trade just before a Powell speech. That is like one of the best ways to get liquidated, I personally think. When in 3 minutes the speech is going to start? In 3 minutes. 4 minutes, 3 minutes. But no, I personally never trade just before stream. Do you think good afternoon or wonderful? Yeah, I don't know. It's so hard to predict the Powell speech. It's so hard to predict. I don't know. He is going to. I saw that he is going to give some comments on the economic outlook, so it's definitely going to be volatile. But yeah, the most important stuff, is he going to talk about QE or QT? I don't think so, but if he will, it is going to be super bullish or very bearish. Is he going to be hawkish or dovish? Lately, he has, of course, been more hawkish, or more dovish, I mean. What's your stop loss on your trade currently? I don't have a stop loss open on my trade, because I want to be accumulating on the way down. If Ethereum is going to move much lower, I will DCA in my trade. I will increase my position size. And maybe from there, if I have my full position open, then I will be putting in stop loss. But we can also talk about this after the speech. Because yeah, I do have still a lot of limit orders open here on LBANK. Limit orders on Ethereum. I will be adding more size to my position, because eventually I do want to build a 20 to 30k position here. And yeah, if you do want to do the same, make sure to claim that bonus on LBANK, that 50% deposit bonus. When is this speech going to start? It's going to start in about a minute, 2 minutes. When's this speech start and what's it about? I just heard about it. It's Powell mentioning, or it's Powell basically giving his regards of the economic outlook. He's going to give his economic outlook. That's what's it about. Is he going to be hawkish? Is he going to be dovish? That's of course the big question here. Let's see. One minute, guys. I'm excited. I'm very excited. Big day it sounds like. Could be. What's my trade doing? Oof. Ethereum is actually moving lower. So it might be the time to open an even bigger Ethereum trading position quite soon here. Okay, speech in... What is it? It should be starting any moment now. There's always a little bit of delay, guys. Always. But this should be starting any moment now. Now here, something started. But I don't see Powell yet, so... Let's see. This one hasn't started yet. I'll just keep my eyes on it. It's going to start any moment now. Big thank you for live streaming, no problem. Guys, in just a few seconds I will also turn on the sound, but I don't see Powell yet. Once I do see Powell coming in, we will be watching that, of course. Let me also quickly check the news. Okay, he's not speaking yet. I don't see anything coming out yet here. Any moment. Pump it, hopefully. It's true, literally going to start any moment now. Is that Powell? No, no Powell yet. This is somebody else still. I think his speech will start in 5 or 10 minutes or something, because that is what I originally saw for the stream. Jerome Powell is expected to speak soon. Oh, he's actually speaking now, I see, on the news. So the live stream should be starting soon. Powell speech. Of course, the speech always will have a little bit of delay, so keep that in mind. Look. There's always some minutes of delay. Because in real time he is speaking now. But in just a few moments we can watch the stream. Let's eagerly wait for it. Because here I do see the first comments coming in. Economic growth is moderated, long inflation expectations. I think this is the statement they release. And now they always release a statement at first and then the speech starts. So he's not actually speaking now. This is just a statement. I will be posting about this on Twitter also shortly. This one will start yet. I think he will speak in the next 5 minutes. That's usually how it goes. I will answer the question about altcoins and stuff just in a minute, guys. I'm also checking the news on my phone for a bit. Still waiting for Powell. I've seen your question, bro. I will mute you if you are going to keep spamming like this. I will mute you. But yeah, first news has been coming out there. I will just quickly show you guys because he's not speaking yet. But his statement has been coming out. Let's see what stuff he has been saying. Tariffs will likely show up in the inflation data. Consumer spending has slowed down. Businesses uncertainty weighs on outlook. Tariff increases likelihood of higher inflation. Uncertainty over inflation. He's mostly talking about inflation. Downside risk to employment have risen. We did know that by now. Still, this guy is speaking. Yeah, at any moment Powell should be speaking. The news coming out, the news you're seeing coming out now is not him speaking. It's the statement that always gets released before the Fed chair is going to speak. So a lot of people don't get this, but he will go up in, I expect, 5 minutes. That's what I'm currently expecting. In about 5 minutes. Public trust in economic and political institutions has been challenged. Those in public service must focus tightly on critical missions. Look, this is his statement. He's just going to read this for us in 5 minutes. Statement has been coming out now. And I will also be doing some posts on Twitter, guys. And then in, I think, about 4 minutes. Yes, there he is. I see him coming in on another stream. Yes, there he is.
Providence Chamber of Commerce, as Lori mentioned, was in the fall of 2019, actually November 25th, 2019. And I said then, quoting, "If the outlook changes materially, policy will change as well." Well, little did any of us know, just a couple of months later, the COVID-19 pandemic arrived. Both the economy and our policy evolved dramatically in ways that no one could have predicted. Along with actions by Congress, the administration, and the private sector, the Fed's aggressive response helped stave off historically severe downside risks to the economy. The COVID pandemic came on the heels of the painfully slow, decade-long recovery from the global financial crisis. And these two back-to-back world historical crises have left behind scars that will be with us for a long time. In democracies around the world, public trust in economic and political institutions has been challenged. Those of us who are in public service at this time need to focus tightly on carrying out our critical missions to the best of our ability in the midst of stormy seas and powerful crosswinds. Throughout this turbulent period, central banks like the Fed have had to develop innovative new policies that were designed to deliver on our statutory goals during times of crisis, rather than for everyday use. Despite these two unique, extremely large shocks, the U.S. economy has performed as well or better than other large advanced economies around the world. And as always, it's essential that we continue to look back and learn the right lessons from these difficult years, and that process has been ongoing now for more than a decade. So, turning to the present day, the U.S. economy is showing resilience in the midst of substantial changes in trade and immigration policies, as well as in fiscal, regulatory, and geopolitical arenas. These policies are still emerging, and their longer-term implications will take some time to be seen. Recent data show that the pace of economic growth has moderated. The unemployment rate is low but has edged up. Job gains have slowed, and the downside risks to employment have risen. At the same time, inflation has risen recently and remains somewhat elevated. In recent months, it has become clear that the balance of risks has shifted, prompting us to move our policy stance closer to neutral at our FOMC meeting last week. GDP rose at a pace of about 1.5% in the first half of this year, down from 2.5% last year. The moderation in growth largely reflects a slowdown in consumer spending. Activity in the housing sector remains weak, but business investment in equipment and intangibles has picked up from last year's pace, largely reflecting the AI build-out. As noted in the September Beige Book, which I bet you wonder what it is, the September Beige Book, that's a report that gathers qualitative information from across the Federal Reserve System. We'll talk about later. Businesses continue to say that uncertainty is weighing on their outlook. Measures of consumer and business sentiment declined sharply in the spring. They have since moved up, but remain low relative to the start of the year. In the labor market, there has been a marked slowdown in both the supply of and the demand for workers, an unusual and challenging development. In this less dynamic and somewhat softer labor market, the downside risks to employment have risen. The unemployment rate edged up to 4.3% in August, but has remained relatively stable at a low level over the past year. Payroll job gains slowed sharply over summer months as employers added an average of just 29,000 per month over the past 3 months. The recent pace of job creation appears to be running below what we call the break-even rate, that is the rate needed to hold the unemployment rate constant. But a number of other labor market indicators remain broadly stable. For example, the ratio of job openings to unemployment remains near 1, and multiple measures of job openings have been moving roughly sideways, not down, as have initial claims for unemployment insurance. Inflation, meanwhile, has eased significantly from its highs of 2022, but remains somewhat elevated relative to our 2% longer-run goal. The latest available data indicate that total PCE prices rose, that's personal consumption expenditure prices, that's the inflation measure that we follow most closely, rose 2.7% over the 12 months ending in August, up from 2.3% in August 2024. Excluding the volatile food and energy categories, core PCE prices rose 2.9% last month, also higher than a year ago. Goods prices, after falling last year, are driving the pickup inflation. Incoming data and surveys suggest that those price increases largely reflect higher tariffs rather than broader price pressures. Disinflation for services continues, including for housing services. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs. Beyond the next year or so, however, most measures of longer-term inflation expectations remain consistent with our 2% inflation goal. The overall economic effects of the significant changes in trade, immigration, fiscal, and regulatory policy remain to be seen. A reasonable base case is that the tariff-related effects on inflation will be relatively short-lived, a one-time shift in the price level. Now, a one-time increase does not mean all at once. Tariff increases will likely take some time to work their way through supply chains. As a result, this one-time increase in the price level will likely be spread over several quarters and show up as somewhat higher inflation during that period. But uncertainty around the path of inflation remains high. We will carefully assess and manage the risk of higher and more persistent inflation. We'll make sure that this one-time increase in prices does not become an ongoing inflation problem. Turning to monetary policy, near-term risks to inflation are tilted to the upside, and risks to employment are tilted to the downside, a challenging situation. Two-sided risks mean that there is no risk-free path. If we ease too aggressively, we could leave the inflation job unfinished and need to reverse course later to fully restore 2% inflation. If we maintain restrictive policy too long, the labor market could soften unnecessarily. When our goals are in tension like this, our framework has long called for us to balance both sides of our dual mandate. The increased downside risks to employment have shifted the balance of risks to achieving our goals. We therefore judged it appropriate at our last meeting to take another step toward a more neutral policy stance, lowering the target range for the federal funds rate by 25 basis points to 4 to 4.25%. This policy stance, which I personally see as still modestly restrictive, leaves us well positioned to respond to potential economic developments. Our policy is not on a preset course. We will continue to determine the appropriate stance based on the incoming data, the evolving outlook, and the balance of risks. We remain committed to supporting maximum employment and bringing inflation sustainably to our 2% goal. Our success in delivering on these goals matters to all Americans, and we understand that our actions affect communities, families, and businesses across the country. So thank you again for having me here, and I very much look forward to our discussion. Thanks.
Thank you very much. Good afternoon once again, Mr. Chair. Thank you for those opening remarks and reminding us just how tremendously the world has changed and evolved since you were last here in 2019. President of the Federal Reserve Bank of Boston, Susan Collins, is also here with us today. And President Collins, we have had the opportunity many times to discuss with you the conditions in this Fed region, of which Rhode Island is part of the Boston region. So, Mr. Chairman, I would ask you to think about your comments reflecting on the importance, what you have said, the importance of deeply understanding local labor markets. And I'm wondering if in your deliberations leading up to the most recent FOMC meeting, whether there was anything particularly distinctive in what you saw coming out of the Boston Beige Book.
So let me say a word about the Beige Book. So there are 12 reserve banks, as you know, around the country, and each of them has deep ties into not just the business community, but medical community, educational community, nonprofits. And each FOMC cycle, which is sort of 8 of those a year, they do a deep dive and they collect lots and lots of information about the economy. And so, and that information gets collated and put into what we call the Beige Book because it's beige. And we're not that original. And so we get that a couple weeks before each FOMC meeting. And I have to say, I don't know of any source of sort of qualitative information about the economy that even approaches this. It's just a lot of conversations with a lot of people, and I personally find it very useful. Sometimes you look at that book and you see significant regional differences, and this is not one of those times. So, for example, the Boston Fed piece in the last Beige Book talked about lots of spending on AI. Well, guess what? That was pretty common across 8 or 9 of the districts. So I would say nothing really jumped out from the Boston piece. What you saw was all around the country, you saw pretty modest growth, wage and price inflation at modest to moderate levels, the economy growing but not fast, and uncertainty, significant uncertainty about federal public policy is kind of weighing on investments and decisions about investment and hiring, except in the area of the AI build-out, which is just going really strong pretty much in many parts of the country.
So nothing distinctive from the Boston region that would inform your future decision-making looking at the setting of monetary policy?
What I saw from Boston was quite similar and overlapping with a number of other districts. Again, sometimes that's the case where things are pretty much of a piece. Sometimes different regions, particularly if there's a commodity price thing, you would see maybe things in the commodity-oriented regions doing differently from other regions of the country. Right now, it's much more the same around the country, I would say.
So let's talk about and build on what you described a few moments ago about the dual mandate of the Fed. And if you could talk about these conditions that wax and wane over time, what signals will you be looking for in the run-up to the next FOMC meeting, which is in roughly 30 days?
We have 2 goals, as you mentioned, maximum employment and price stability, and they're equal goals under the law. So almost all the time, they work together. They complement one another. So, for example, when the economy is weak, the unemployment rate might be high and the inflation rate would be low, and that it calls for stimulus from us. And when the economy is really strong and the labor market is tight, that's when inflation will be moving up, and so policy might be a little bit tighter. That's almost always the case. Right now is the quite unusual case where risks to, as I mentioned in my remarks, risks to employment are to the downside and to inflation to the upside. Now, we only have one tool, which is monetary policy, really interest rates, and really it's calling for different answers. So for a long time, we have a document called the Statement on Longer Run Goals and Monetary Policy Strategy. We call it the consensus statement to save time. That says, for a long time, it's said that when the 2 goals are in tension, we'll look at how far each one is from its goal and the time that it's expected to take to get back to that goal. And so we balance the 2 goals. So what we've done all year this year is we've had our policy rate has been tight because inflation has been above our target, but the labor market was very solid. Now, over the last really 4 months, really over the summer, the labor market has softened, payroll jobs have dropped a lot, so we can't really say that anymore. And I think what that told us is that stance of really having a tight focus on inflation really needs to moderate toward a more balanced approach. And so that's why we took the action we took at our last meeting. And as we go to our next meeting, to your question, we'll be asking ourselves, we'll be looking at the data very carefully, labor market data, growth data, inflation data, all of the vast quantities of data that we get, and asking ourselves, is our policy in the right place? And if not, we move it there.
Some may wonder about the frothiness of the markets reaching record heights and also record valuations. How does the Fed think about that in the equation?
Financial markets? So we monitor financial markets very carefully. Our policy works through financial conditions, so that's credit spreads and interest rate levels and equity prices in the aggregate that can affect spending, for example. We look at all of that, but really our focus is on our two goals, and that is maximum employment and price stability. And when we see one of them weakening, we're going to respond appropriately with our tools. And in this case, that meant reducing the federal funds rate by 25 basis points, and we'll see what the future brings, but that's what we do. We look carefully at financial conditions, more from a perspective, though, of financial stability. So we see that the banks are well capitalized. Actually, in the aggregate, households are in good shape financially. I know people at the bottom end of the income spectrum are under pressure, no question about that, but it's not a time of elevated financial stability risks.
Mm-hmm. So the federal funds rate really governs consumer credit, but not so as it pertains to mortgage rates, correct?
That's right.
And let's talk about how the average consumer is going to see any difference in the intervening months relative to an easing of interest rates and the ability and maybe even more confidence to spend.
So we don't set mortgage rates, but when we change the federal funds rate, it will affect the mortgage rates and also all other consumer borrowing rates. Really, all interest rates that are on a floating basis will move a little bit or even a lot if they're short term based on our moves. So the people will feel that over time. Also, it's not just these days, the market is pricing in the next 6 months what's going to happen to rates. So this is something that wasn't really the case 50 years ago. Now markets listen to us and follow, and they make an estimation of where they think rates are going. And so they'll price things in, and so longer term rates will move because of what the market expects, market participants expect us to do. So you'll begin to see, and you're already seeing, changes in rates long before we make the decision. It can often be already, priced in.
Is it fair to say that the Fed and the markets really have a higher tolerance for risk today, more so than perhaps before the pandemic?
I think if you look at some prices, then they're elevated relative to historical levels. There were times before the pandemic when it happens periodically. Equity prices will move up and down, and we do monitor that. But we're not targeting any level of prices for particular financial assets. We don't have a view that we know what the right price of any particular financial asset is. We do look at overall financial conditions. And we ask ourselves whether our policies are affecting financial conditions in a way that is what we're trying to achieve. But you're right. It by many measures, for example, equity prices are fairly highly valued.
Let's segue to the topic of AI, and largely AI stocks and periphery stocks really driving the markets in many ways. Let's talk a little bit about the great unknown of AI, and if we think about various ages, our industrial ages, whether it be steam to electricity to the information age and now to the age of AI, would you consider this to be the most disruptive force ever in modern American history?
I think it's way too early to say that. I wouldn't go that far. I would say clearly generative AI has all the earmarks of an emerging technology that could be very important in our economy and in our society. But it's very early to be, to be making that kind of bold statement. So, what we're seeing is companies and institutions like the Fed for that matter, are starting to experiment with how this new set of tools can be used in our operations. And it's very early days on that. And, I think we have to wait and see. That's a good thing. I know many of the large financial institutions and other central banks, and we are asking ourselves, how can this help us do our jobs better? And I think it's going to be a period of experimentation over a period of years. And, the history is always that there's a lot of fear that technological innovation will eliminate jobs. What has tended to happen in history over time is that it just raises productivity and creates new jobs to replace the old jobs. And that happens. And sometimes it can take a long time, but ultimately that has been the pattern for the last couple of 100 years. Is this time going to be different? I just don't think we know yet. I don't think anybody knows.
You are a labor market futurist, also a historian, and the concept of AI and humans in the loop, very profound impact on the labor force. What are your thoughts about specifically agentic AI as a differentiator from generative AI, and how will the Fed be looking at the impacts of the workforce, the labor participation rate, given the unknown of what could happen with displacement around AI tools at all ends of the spectrum?
Our tools work on demand, basically. Lower interest rates, higher interest rates, they work on demand. When there are structural changes in the economy, there's not a lot that an interest rate change can do for that. And so if you're talking about distributional issues or labor force participation or retraining or any of the things that come to mind in connection with those questions, that's really going to be something for legislators and the private sector. We of course, we have many labor economists, and a good portion of them are studying what the potential effects of AI on the labor force, and many great economists around the country and around the world are publishing on that now. And it really is too early to say. I think you can say that some jobs are going to be phased out, some jobs are going to evolve, and people are going to be further trained and that sort of thing, and be able to keep a job like that. And there'll be new jobs that come. And how will that balance work out, and what will be the timing of it? I think it's just quite hard to say.
But how does that factor into the deliberations on a near-term basis? Things are moving so quickly, and the observation and the argument that artificial intelligence isn't just impacting those entry-level jobs and those, quasi-unskilled jobs, but really tentacles reaching into highly skilled professions, whether it be finance, whether it be communications and media, whether it be healthcare, whether it be law, finance. So all ends of the spectrum, highly educated individuals down to more easily automated tasks. Sort of a really interesting problem for those of you that are studying labor market economics. How do you approach that?
Well, a lot of what we're doing with our time is trying to understand the current position of the economy, what's actually going on in the economy today. Pardon me. So part of that is hiring rate has really dropped. Job creation has dropped very sharply. So what are the factors there? So I mentioned earlier, I think, part of it just is there's a lot of uncertainty about the direction of public policy, and so companies are holding off, they're not hiring, and when you don't hire through attrition, your labor force shrinks and you save money that way. That may be a way of passing on tariff costs. It may be something like that. So that's happening. Lots of questions around whether AI is a major factor associated with the relatively low hiring rate for people just graduating from school and just entering the labor market. And people are doing studies on that, and I looked at one from Stanford, another from the New York Fed in the last week, and the sense of it was We think we can find some evidence that AI, generative AI, is having some, it's one of the reasons here, but we can't really say it's the main reason. Can't really say it's the main reason. And you know, we have our Jackson Hole conference every year in Jackson Hole, Wyoming, and we had some great labor economists, and one of the big debates was what's going on with AI, and there was a professor from, I want to say, Columbia, who just basically said, there's no evidence that this is acting any differently than other. Her view was not acting any differently from other technological, movements, waves, and so I think she would be more at the end of an optimist, a techno-optimist. We've all, there are books out there that will tell you the world is ending, and but I don't think we know. Again, I think we're going to see how this evolves, and again, if it does turn out to be something where labor force participation really declines in a way that creates, social difficulties, that's going to be something that legislators and the private sector will have to address. We just don't know that yet, though.
Over the weekend, I read where you had been discussing, just picking up on what you said about Gen Z and college graduates and any possible disruptions in trying to find jobs. So Gen Z would be those born between 1997 and 2012, roughly ages 13 to 28. What are your thoughts on college enrollment? We'll talk a little bit about labor disruption in just a minute, and Jackson Hole, because I know that's a favorite of yours, but a lot of the individuals in this room today may have family members that fall squarely in that 13 to 28 category. What would you say about that?
I mean, again, we all see the data that it's just gotten tough for people just entering the labor force to be hired. But remember, the overall national aggregate hiring rate is at very, very low level. The layoff rate is also at a very, very low. You're in a low fire, low hire economy, and it feels like companies are they've kind of stopped hiring or slowed down their hiring because they want to see how this all shakes out. We're having very important changes to economic policy in the United States, and companies and people are wondering how's that going to work out. So I think that's part of it. The other thing I would add, though, is there's a lot of good scholarship around technological innovation and inequality, if you will. And the sense of it is really that if schools and society give students graduating the skills and aptitudes they need to benefit from evolving technology, you can have declining inequality over time. And that's what the United States had for many, many years, up until about 1970, when U.S. educational attainment kind of plateaued and inequality takes off. So it's really down to having the skills. So kids who come out of school today with technological skills and can work with this new technology, they're probably going to be fine. They're going to be great. If you don't have those skills, though, you're increasingly left with less attractive employment options. So in a way, it's an educational issue.
Our society is our education system, and you spoke about inequality, particularly the digital divide, and thinking about where the United States really has paced among countries throughout the world. Particularly, that was a subject that you initiated at Jackson Hole back in August. What are your thoughts on how that is likely to really change the way we look at technology as a force for productivity and advancement?
I mean, technology has been raising incomes and productivity for really a couple hundred years since the Industrial Revolution. It's been an amazing thing for the quality of human life, and there's no reason why that has to change. In the United States was the first country to have gender-blind secondary education, and if you go back, you'll see that there's a great book on this, but it just basically the U.S. had fast technological innovation for a century, and also declining inequality because people were coming out and their educational the capabilities they took out of the educational system gave them the ability to benefit from evolving technology. So, and that's really the key, because technology, what it does is it makes us more productive. One summer I worked on a project that was building houses, and I basically had a shovel and I just dug most of the summer. And Now that would be a Bobcat, which can do 100 times the work, no blisters, no water breaks. It's just much more productive. And you see housing production's gotten, at least it did get for a while, much more productive, right? Not so much lately. But that I think is the story. And while U.S. educational attainment, college graduation rates and things like that leveled out, they're still going up. The rest of the world caught on and has really caught up in terms of educational attainment. And that really is the key. To your point, your educational system, your country is your educational system ultimately. It's the people that come out and what can they do, and a variety of other factors too, obviously. But I think that's a key element. I'm struck by this because this was a major factor at our recent conference, and we had a great conversation about it.
Well, tell us about the book. You gave me a homework assignment the other day, so I did download it, but I think everyone should follow that lead.
All right. It's a book is called The Race Between Education and Technology. It's by Claudia Golden and Larry Katz, two Harvard economists, and it basically talks about the race between education and technology. So I recommend that to anybody. It was written in, I want to say, 2005, and they basically presented at Jackson Hole, they presented an update to the current day. The findings basically hold. It's very, I mean, I'm not a PhD economist. I read it 20 years ago.
But you said it still holds very much true today.
It does. And I think it's a good explanation for why the U.S. has had, rising inequality. This is their thesis, and I think it's they call it also skill bias technical change. So you need skills to benefit, but if you have those skills, then technology makes you more productive, and that's what we need. Incomes can only rise if productivity is increasing. We're sort of working as many hours as we can work now, so it really is down to how much output can you have in an hour, and that's productivity. So I would recommend that. I'm not getting any royalties for that, but by the way, Claudia Golden won the Nobel Prize for her work about 2 years ago. So I'm not the only one who thinks it was good work.
Chair Powell, let's move on to tariffs. This is an issue that confronts the business people here with us today. You addressed it very briefly in your opening remarks. You indicated that you believe that the costs of the tariff movement is in fact more transitory than embedded in supply chain. So I think we would appreciate hearing more about how the Fed thinks about evolving tariff policy.
So we're now collecting a good bit of revenue. The federal government collecting a good chunk of revenue, at a $300 billion a year pace. And the question is, who's paying that? And the candidates for paying those tariffs would be the exporter, the foreign exporter, or someone on our shores. It could be a company or a retailer, or someone who's using the imported product to manufacture something, or the end consumer. And so so far, in its incredibly early days, it doesn't look like the overseas exporters are carrying the bulk of it. It looks like it's that middle group. It's retailers and it's importers, and they're not passing along to consumers that much of the cost. So the actual effects on inflation have been quite modest so far. It's really not. It's a small amount, but I mean, for example, I mentioned that core PCE inflation is 2.9%. Maybe 0.3 or 0.4 of that is tariffs. So it's not the big factor. It's not a big inflationary thing, but it is something that is driving up inflation a bit. And the question is, are companies then, are they going to eventually be able to pass that stuff through? And then that might drive inflation up a little higher. So we've been watching this since the beginning. Half our mandate is inflation, and I would say that the pass through to consumers has been later and less than we expected. How much of that will continue, I don't know, but the responsible thing from our standpoint was to watch and wait, because it's our job to make sure we don't make a mistake on inflation.
Well, that was my question. Do you imagine that is going to change, where the cost of tariffs will be more deeply embedded and passed on to the consumer? What do you foresee as?
So our forecast, and I think almost all the forecasts are for there to be a one-time pass-through, which will go through the end of this year, well into next year, and that by the end of next year, the one-time increase from the tariffs will be done, and you'll be back to the non-tariff related inflation, which should be much closer to our 2% goal. That's almost everyone's base case. It's actually our job to make sure that that's the outcome, though. So we can't be in a situation where we're just going to assume that. We can't leave that part of the goal unguarded. And so that's why we've been careful about cutting. We didn't want to cut too early. I mentioned in my remarks, if we cut too early, we may find out in a year that inflation actually wasn't under control and it's back up to 3.5% or 4%. No one thinks this is the base case, but that's the risk of cutting too early or too much. Of course, the risk of cutting too late, as I mentioned, is that we unnecessarily, the labor market weakens unnecessarily. There's no risk-free path, and it's a very difficult policy environment when your two goals are telling you two different things. You've got to make a compromise, and we really, again, haven't been in that situation for many, many years. It does happen, but it's happened now, and we'll manage our way through it. But we sort of have to look at both of them as equal. We can't just say we're going to do this one and not that one, unless this one is clearly a greater risk. And now they're coming into closer balance, I would say. We do see meaningful weakness in the labor market now, very low job creation. The unemployment rate's still low, though, and the quits rate is low, and a lot of things suggest that the labor market has reached a kind of unusual stability of much lower demand and much lower supply for workers. It's a really unusual kind of a balance, if you want to call it that, but nonetheless, we think it's downside risk.
Well, if you could elaborate, what are some of the factors that are leading to depressed demand for labor?
So depressed demand for labor, based on surveys and talking to people who are doing hiring, a big chunk of it is that they're just unsure about what to do. Businesses, and I'd love to talk to people after this. Businesses don't want to do a lot of hiring. They may be postponing major capex, major initiatives, major acquisitions, and maybe they'll replace workers who retire, but they're not looking to grow. This isn't every company and every part of every company in the world. It's just an effect kind of at the margin. That's got to be part of it. I think that's the demand side. The supply side, of course, has a lot to do with immigration policy. So immigration was at a very high level for 2 or 3 years before this year, and now immigration has really gone close to zero, and immigration is not really contributing to the labor force growth now, whereas it's been most of what the labor force growth was, and now so at the same time you've got declining demand and also declining supply of workers, of new workers.
One of your passions is demystifying the Fed. You enjoy speaking about it, and those that are Fed watchers are wondering, will there in fact be 2 additional rate cuts before the end of the year? Of course, we're uncertain about that, if I understood your comments correctly. What does it mean to demystify the Fed, and what can each of us in this room do to be better Fed watchers for the benefit of our own businesses, if you will?
So not so many years ago, maybe 40 years ago, and for a long time before that, the main theory of central banking was to be mysterious and obscure. In fact, Montague Norman, who's a very famous former head of the Bank of England, but ending in the middle of World War II, famously said, never apologize, never explain. And he thought that monetary policy worked back, and everyone thought it works best when no one understands. It's kind of mysterious. So starting maybe 40 years ago, a bunch of economists, including Alan Blinder and a number of others, said, you know what, that's wrong because market committee announcement.
Okay, guys, I think I will end the Powell speech for now, because not much more very interesting stuff is dropping now. Mr. Crypto, I think I see a lot of people from the Mr. Crypto stream also joining in. So how are you guys doing? Amazing. Mr. Crypto, very nice guy. Always a very nice guy. Yeah, let's first of all see how my trade is looking. Actually, I haven't been looking that much to the markets. He's wearing a purple tie, which is cool, I guess. It's definitely cool. My trade has basically done absolutely nothing. We have not even seen a lot of volatility, to be fair. So, also not a lot to discuss, I think. The price action here, yeah, actually Bitcoin's coming down ever so slightly, but not by that much. And Ethereum just continues doing exactly the same like it was doing before the Powell speech. So yeah, not a lot happening here. So yeah, basically for me, not a lot is going to change here then. I'm just going to stay or to stick to my strat. Currently breakdown 100x long to 115. Now, for the people new that have been joining in, I do still have my Ethereum trade open of about an 11k position. I'm going to DCA into this position on the way down if Ethereum is going to drop lower. For Ethereum, I do have a worst case scenario of this 15% dip after breaking below the 50 daily moving average. That could be something for Ethereum here. I don't necessarily think that Ethereum is going to drop this low. But in that case and in this zone, I'm going to be buying, I'm going to be accumulating, and I will increase my long position. I'm doing so on LBANK, and on LBANK you can currently claim a 50% deposit bonus. So make sure to check out that deposit bonus here. With the link on the live stream, you can claim that exact deposit bonus, and then you will get redirected to this page. There you can claim the 50% deposit bonus to start trading yourself on LBANK. And you can follow me on my Ethereum trade. I will be updating all the way here, or you can just open another altcoin trade on a different altcoin like Aster and a lot of other stuff, because they are listing altcoins very quickly all the time. And by the way, if you do want to get updated really quickly and, for example, also participate in the trading competition, make sure to join the private VIP Telegram channel in the description here. Make sure to check it out, because there I can update you guys in real time on the trades I'm taking, on the trades Crypto Rover is taking also. He's also in this group, and 5 professional other traders, all with their own style, so you can learn from different perspectives in the markets. So yeah, make sure to join the VIP group if you're getting interested in exactly that. You're going long. Yes, I'm definitely going long. I'm going long. I am long on Ethereum in this trade, like I've been sharing on my channel here, in this 11k position. And yeah, like stated on the way down, I will be adding more to this position. I also have some limit orders open here at the 4k, 3.8 and 3.6k levels. But yeah, I will be accumulating more, and I want to build one big Ethereum position on LBANK. And you can easily do the same also with that 50% deposit bonus. Maximum deposit of 5k, and then you also get the maximum bonus of 2.5k. So keep that in mind. And guys, yeah, just to end the stream, like stated, unfortunately the daily candle is now red again for Bitcoin. That is not something I was hoping to see. I want to see the daily candle close green for Bitcoin here, so we can confirm this inverted HNS and we can push higher towards this resistance level. The neckline of this HNS corresponds with exactly this resistance level, where we have seen some major resistance for Bitcoin here now once again. But I do know once we break this resistance, we usually move to new all-time highs. So this is going to be a hugely important phase, and I do want to see the daily candle close green. Hopefully that happens today, because then we can confirm somewhat of this inverted HNS pattern. Then if we can reclaim that resistance, the next move is going to be to the range high, and maybe there we can be moving a little higher, initiating the final Bitcoin wave. But ultimately, yeah, first of all, we need to reclaim this resistance and flip it into support. Should I buy and hold? Yes, of course. On spot, you can definitely be buying and just holding. I don't think for spot it makes much sense to wait much longer, because in that way you can also actually miss out on altcoin season. If you're opening a position, for example, on LBANK, it's going to be a little bit different, I think. Then you should have an DCA or something else, just expecting one more dip maybe. I'm buying ETH too. Amazing to see. Okay guys, so like stated, claim the deposit bonus, join the VIP Telegram channel, and then we can quickly check the target rate probabilities also. 91% for October. 77 for December. Literally nothing changed here. So, okay. In that case, I will be ending the stream also, guys. So, I hope you guys enjoyed the stream. Thank you all for watching. You can find all the relevant links in the description on this live stream. So, make sure to check those out. Thank you guys all for watching here. And I will see you guys in my next live stream tomorrow. Also tomorrow I will be live once again, so make sure to come and join. Or I will see you in my next update video tomorrow morning.